Thanks very much, Tyler. Mr. Gensler, thanks very much for joining us. I appreciate it. You have a proposed rule that would require U.S.-listed companies to disclose climate-related risks. I'm wondering if you can flesh this out a little bit for us. What exactly do you want corporate America to disclose?
Well, Bob, we've had this regime for 90 years where investors get to decide on what risks they want to take. Companies make full and fair disclosure. And increasingly, companies are disclosing climate risk. And so we're stepping in to help bring some consistency, some standardization with regard to those disclosures, some qualitative disclosures around strategy and governance and the like, but also, yes, as Tyler said earlier, some metrics as well with regard to their greenhouse gas emissions and the financial effects on their current financials.
Now, you mentioned greenhouse gas emissions. Who is vetting these numbers? If I'm a corporation and I say I have XYZ greenhouse gas emissions, who's vetting them? Is there going to be an independent audit agency? Will they be held accountable, or will the company be held accountable if their numbers are not accurate?
Well, again, we just put a proposal out to comment today. We need the public to weigh in, and I invite all of your listening public to weigh in and give us feedback. But on your question there, companies are ready. A vast number of companies are disclosing some things around their greenhouse gas emissions, but we have put a proposal out that would include, over some phased-in period over a number of years, that outside independent experts would attest to the numbers, and basically, as you call it, audit the numbers.
Yeah. Now, you said before that climate change is material information for investors to make informed decisions. This word material is a very important word. It says legal connotations. Why is climate disclosure material for investors? Can you explain that?
Well, so what we have is hundreds, if not thousands, of companies already making disclosures, and yet those disclosures are fragmented. They're sort of different. They're following different standards. We have a role to bring in some standardization, some consistency and comparability. Materiality is a really important concept our Supreme Court has defined, and it's about investors deciding whether to buy or sell a stock, make a vote on a proxy statement with regard to the future economics. And climate risk today is being taken into consideration by literally over $100 trillion of investor assets under management are taking in climate risk today about the future, because what is the price of a stock? It's a price today about the future performance of a company.
Gensler, it's Kelly here. We appreciate your time. Your predecessor has a pretty stark warning in the Wall Street Journal today about the path that you're going down, where he worries that it would draw legal challenges, that it's a matter that should be left up to Congress, that perhaps no single agency should be responsible for setting climate policy, which requires so much more input than just a single agency's determinations. What's your response to those criticisms and to those who feel that this puts at risk your central task of safeguarding capital allocation?
Well, Kelly, I'm sorry, I don't accept the premise. We at the SEC are just narrowly focused on disclosure and investor protection on one side and capital formation on the other side, efficiency of the market in the middle. So this is trying to bring some standardization, some consistency to what's already happening. We had our first environmental disclosures in the 1970s. We have climate risk guidance from 2010. So this is trying to build upon that and bring some consistency in this one area. This is so investors are better informed, more consistently informed. And so companies on the other side also get the benefit of consistently sort of knowing how to kind of have that conversation with investors. This is not about, with all respect, what some people have said, a broader bit about climate policy. It's about disclosure and time-tested rules of materiality around disclosure.
Shepard Smith here. Thanks for watching CNBC on YouTube.